All the money is gone. Hi, and welcome to another video. My name is Michael, and we talk about investing and personal finance. If you like what you see, click the like button, subscribe to my channel, and you can follow me on Instagram as well. Yeah, today a little bit of a different topics. I wanted to provide some updates on the current share market. And I thought it was too much to just capture in my usual weekly video. So I thought I'll create a really quick additional video just to bring you up to speed of what's going on. And we're going to cover three things today. First of all, the general panic, I can almost say, on the share markets and the recent sell-off of all stocks related to all the concerns regarding coronavirus. The second one will be kind of related. It will be around what Donald Trump has to say about it. And the third one will be, because it happened this week as well, Warren Buffett published his annual letter to the Berkshire Hathaway shareholders. So really interesting, and yeah, stick around. What I'm going to do is I share my screen live and we go to a couple of topics. So what you see here is the S&P 500, and as you can see, this is the last 6 months, and there is quite a big dip that you can see in the chart, and that recent sell-off is actually already quite a bit. I used my trading view profile and did a bit of a look up on how much the market already fall in total, and it's coming up to more than 8% already from its recent highs, and that in I think less than 5 days, or in exactly 5 days. I think it started Friday, and yeah, so definitely already concerning when the market goes down with over 8%, and that in just 5 days. But certainly, I would not assume that this is the end of the rally down. Certainly, there can be a couple of days where the market can recover a little bit and go up again, but that certainly looks a little bit like a longer downtrend. And probably going into something that will definitely change the market tomorrow as well, because Donald Trump, or on Thursday, Donald Trump gave an interview and he was not able to reassure the traders that this will be any better. So he basically raised some concerns, and he even appointed someone to look after all things related to the coronavirus outbreak. So Mike Pence takes now over all that work related to the virus and tries to coordinate the resources in the US. There was now also the first confirmed case from someone in the US where is not really sure how he got infected. So that's certainly one of the one of the bigger concerns in the US. And from other news, I saw that in Italy there are now also more confirmed cases. And yeah, all that unsure, all those unsure situations in the market are certainly very tough on the market environment, and it's going to be really interesting to see what that will look like. I already took quite a bit of profit a couple of weeks ago from all the investments that I had. I'm still a little bit invested, so I certainly will get a dip in my portfolio as well, but certainly not as strong as it would have basically happened to me a couple of weeks ago, because I somehow felt like that the market was so up high and all the concerns around the coronavirus already back then. But 2 weeks ago, the market even got even higher after the first little dip down. And so the market was not too concerned about everything related to coronavirus. But now it's different, and it can be different tomorrow again. But that's what the share market is about. And last, I want to share what Warren Buffett had to say. And so he gives out a letter to his shareholders every year. And all shareholders from Berkshire Hathaway and also other people that are interested in investing in general are looking forward to that letter, because he addresses the things that are currently going on that he thinks are important for his investment company. And when you look at his webpage, it's certainly one of the most ugly web pages I've seen in a while. But the advantage of that is that you find what we want, what we are after, really easily. So we want the Warren Buffett letters from Berkshire Hathaway, and you can see that he has started already back in the day to write a letter every year. So the first letter that you can download is from 1977 until today, and every year there's one letter, and it's certainly interesting to see. And if you read through the newsletters, you certainly can learn quite a bit from him. And yeah, the latest 2019 letter, it shows on the first page a couple of information around his performance and his track record over the last years. And as you can see, when you compare his performance to I think it is the S&P 500, he has done well over the years. So an average of 20% compared to an average of 10% from the S&P 500. And yeah, he talks all about what has happened in the recent year, how much he's invested, and what he thinks will happen to the last year. One of the most interesting reads in there at the moment, I would say, is the current taxation change that has affected his balance sheet, and the earnings actually look slightly different to what they look like over the last years. But in the letter, he addresses as well what that actually means and what the changes look like. And then another thing that I want to point out, probably the two main things that stood out in his letter, and I really wanted to share it because I think it's really interesting. So first he's saying, and that is now from the Money magazine in Australia, they actually took out those quotes from the latest Warren Buffett shareholder letter. One of his quotes is, "We constantly seek to buy new businesses that meet 3 criteria." And I think those 3 criteria are actually really important for everyone who wants to purchase shares in direct companies. And the first one is, he says, they must earn good returns on the net tangible capital requirements in their operations. The second one is, they must be run by an able and honest management, which it's probably hard to determine, but that's obviously something that he's looking forward to. And finally, they must be available for a sensible price. And that's something that he is saying over and over again, that you should not buy a company that is, for whatever reason, too expensive. And another quote that the Money magazine took out of that letter, and I find it really interesting, is, "It is almost certain that equities will over time perform far better than long-term fixed rate debt instruments." And especially when you see the market going down in those years, in those days, it's sometimes hard to believe when the market is so fluctuating. But that is what he's saying all the time. And he's even saying that, and that the newsletter got published before the latest drop, but he's even saying that drops of value of 50% can happen to share markets, but the share markets will always recover from it. It's always a question how long it will take. Sometimes it takes a couple of years, sometimes not even. But yeah, I think those are the two most important quotes from that letter that I find, and it's certainly really interesting to hear his perception on the markets, the values, and the valuation of different companies. So yeah, this one was a bit of a different video. I hope it still was interesting to you. So a little bit of a market update. If you think it was interesting, leave a like and tell me in the comments if I should do more of those videos. Thanks for watching, and I will see you in the next one. Bye.